Okay, morning everyone. Good to be here. We will jump right in. We've got a really exciting panel to go through over the next half an hour or so. Briefly, I'm going to ask everyone to introduce themselves and then we'll jump in. So,
AJ Tennant, founder of Tenacity Capital. I'm also very good friends with the Accel venture firm. So moved to London last summer, and I focus on investing into AI application and infrastructure layer companies across Europe and the US.
Hello, everyone. Kelly from Accel. We've been in Europe for boots on the ground for 26 years plus. We're one of the few that came very early and one of the few that stayed the whole way. We're a global multi-stage VC, and I focus on AI infra and apps as well.
Max Bautin with IQ Capital. We're a deep tech VC fund, 20 years this year, investing in deep tech only throughout our history, early stages. And of course, AI is one of the themes that we invest in, but also many themes around AI, energy, infra, robotics, industrial infrastructure as well.
Hi everyone, Beck Lee from Ericsson Ventures. So we are corporate VC from Ericsson. So we build 5G networks for all the telcos globally. So we invest mostly in infrastructure, software and hardware, and I have a focus on AI infrastructure, software and hardware, so the bottom layers of the tech stack.
thank you very much. What a great panel. These are the people who are really making it happen in London and across Europe. Right, first question is for everyone, so please feel free to jump in. So if we strip away the infrastructure layer and the billions or trillions of CapEx dollars going in from the hyperscalers, to what extent is AI generating real revenue, sort of customer retention and improving margin, or how much is just subsidized growth? Kelly, can I start with you on that?
Happy to start. So this is a new technology wave, which means that the infrastructure, I know we're stripping that out, but that's still in the works. Like that's still getting more efficient. So on the AI app layer, while we see a lot of revenue and actually faster revenue growth than we've ever seen before in the software world, the margins are actually, people are more forgiving about that for now. And one thing I've noticed is when we talk to enterprise customers, they're also extremely forgiving in that they're engaging in 1, 2, 3-year contracts with startups that are building, say, finance, like AI finance tools for banks, and the product isn't there yet today, but they're okay with that, and they're happy to become the beta customer and co-develop things together. So I think revenue is real, retention we'll see, but in terms of ROI, we are seeing that happening more and more this year, which wasn't so much a case last year.
AJ?
Yeah, I think everyone is kind of waking up to this idea that a lot of these sort of SaaS 1.0 and 2.0 players, like there's going to be a wave of them that can't make that shift to become AI native. And so across the different sort of SaaS sectors, you know, you've got these upstarts that, as Kelly said, are giving, building products that maybe don't have the same margins, but are very innovative and are AI native from day one. And, everything from people competing with ServiceNow to people competing with customer service technology. And I think those companies, as long as they can continue to deliver growth in terms of user adoption and ultimately business value for these customers, I think they'll continue to grow and disrupt what we're seeing in, with these SaaS 1.0 and 2.0 players.
I think from my perspective, I want to sound a little bit more kind of cautious in that on one hand, there is a bit of a circular economy in all of that. AWS investing in Anthropic then buying compute, and then AWS actually selling the models as well. So it's not wrong per se, but the point is that every dollar is counted 3 times in this particular model as revenue. The margins, OpenAI talked about 33% last year on the gross margin basis. That's not a software margin, it's a hardware margin at best. And then it's all a race as to where the models actually get to the point where they can be just as good as a human in certain tasks. And I think that's where whether we get there before we lose patience on some of these large investments is the question mark. And then on the durability, to your point as well, you know, the only sector that we have really seen where there's a well-established scaled enterprise case with durability of revenue is coding. Everything beyond that is early days from my perspective, where the use case or the durability is not really clear, and then there's always the risk that the leading models will actually eat into that space with time. So it's not an easy space to invest in.
Yeah, otherwise everyone would be doing it. We'll get onto those models in a bit. And Vic, just to finish with you.
Yeah, I think there's still like value in AI applications, but depending on how deeply these AI applications or AI agents are integrated to the enterprise workflow. And I think the other thing is if they can become like the system of record. So I would say if an enterprise use an AI application or AI agent for long enough, and then they store a lot of their workflow and the data with that application, then it will be much harder for them to move on to another one, even though Anthropic or OpenAI is moving into that space. So I think when we are looking into these AI applications, we really would like to see like how durable the moat is, because I think you can see like some companies that they grow very quickly and they have seen like great product market fit. But I think that does not mean that they will have a defendable moat. So I think that's what we are looking into if we want to invest in AI applications.
Brilliant. Kelly, let's talk a bit more about moats and defensibility. Where are you seeing genuine defensibility emerge in the AI application layer?
Yeah, I'd actually even start on the AI infra layer because
Okay.
I love it so much. And actually going back to what you said on defensibility, I do think that the infrastructure layer is most interesting when you can go full stack. So like an investment we did in 2024 is Nebius, which is, it was a crazy, almost like Series A, but was also public because of a weird kind of backdrop story, which you can look up. It was the Yandex team, so it was already public and then it came back to life again. And for that one, the unique piece is you have people who know how to put picks and shovels in the ground to build a data center, power the four walls, and even know how to do the inference software stack on top. So like, I think when you start to build full stack, that's when you have, you know, efficiencies in terms of the full margins. And so instead of having like X% margin, you have a lot more attractive and it's more software-like. On the AI apps layer, I think there are two things that I notice. The defensibility these days come from actually distribution, brand, and that has become a lot more important as like a lot of products look very similar, people catch up on features weekly. And the second one is data. So in certain industries, especially like regulatory industries like finance, healthcare, law, you start to see people actually have a moat by working with customers first, getting that data, iterating on the model, so it's better than Anthropic or OpenAI's.
Just very briefly, I think everyone would appreciate the importance of data. Brand is slightly more out of left field. Just talk very briefly about why that's so important.
Yeah, I can talk about an example. We invested in Lovable, and actually in the US, there were peers that were twice the size when we invested about a year or so ago. And Lovable, and speaking to the Swedish ecosystem, kudos to them, they have this product love, like it came from Spotify days as well. They have a knack for creating like UI, UX, knowing how to promote something on social media platforms. And once people started associating vibe coding with Lovable, that just started to compound.
Yeah, no, I think we can all see that. AJ, so building on Kelly's answer, how do you identify AI companies that are building enduring value? What are the sort of questions you ask and the metrics you look at?
Yeah, I think one thing just to sort of address part of this question is, I think the model providers, my view is that the model providers, with the exception of the coding space, and I could talk about that, are going to be so focused on competing with each other on improving the models. Meaning, right, you know, if OpenAI all of a sudden says, I'm going to go all in and go head to head with Lovable or Rogo or Legora, I think they risk losing more to Anthropic right now than they are. And so my view is like, that's one thing that'll keep the model providers in check. Now, I do think that the coding space is unique. You know, if you kind of take Mark Andreessen, software is eating the world, like, I think coding's eating the world 3 times over right now with AI. And so there, I don't worry as much about, I think there's going to be multiple players because the market's so big. And so I think there can be OpenAI, there can be, you know, SpaceX with Cursor now, there can be Claude Code, and you know, I backed a company called Factory that's in the coding AI space that many people thought was kind of a silly bet to make because so many of these model providers have coding agents. I still think that the market's so big that you're going to have the ability to play. But back to your question around what do I think are the main drivers, it's some of the things that Kelly already mentioned. I think there's 3 main drivers. Speed, right? Just how quickly you're going to market, building your brand. I also think that momentum around product innovation, even though people can build new products and innovate and catch up, I do think there's a stacking, especially if that product innovation is centered on workflows and deeper integrations into the data systems. And then lastly, I think talent, you know, something that Lovable did really well. And, you know, I look at Legora and these other players, they've just become a talent density. And that all of those 3 drivers together, I think, drive momentum and can drive differentiation.
Great. And quickly, any alarm bells, red flags when you speak to potential investee companies?
I mean, I think the alarm bells is when I don't see a founder, the CEO, having a big vision that's like thinking about going fast and iterating fast. So it's, you know, that for me is the alarm bell. I also think if someone's not thinking about talent in the right way, those are the things that get me. Now, there's lots of other things we can go into, but those are the 2 big ones.
Start nagging. Yeah, makes sense. Max, coming to you. So IQ Capital have been in deep tech for 2 decades, as you said, investing at the earliest stage. So interested in your view, do you expect what we're calling the AI application, AI apps, to consolidate around a small number of horizontal platforms, or are we going to see a fragmentation into tens, hundreds, thousands of vertical players? And what does that mean for your investing?
So I think on the first question, I think we'll see both. We'll see a much more rapid and very violent consolidation on the model layer, where we'll end up with maybe 5 global players, and then actually the fragmentation will be much more durable. And in a way, our own investment thesis is that actually there's a 3rd layer. It's not just that. Maybe call it 3-dimensional, but there's also a physical layer to that. There's a world in which we call it. It's not just about vertical applications in a particular domain. It's about stepping out of the kind of LLM world and saying, what about physical AI? What about things which you cannot build just on the language? What about specialist applications in regulated industries, as Kelly was saying? And so where can we actually find a very durable mode for companies that are either going under the stack, the model stack, so you're talking about infra provision, or above it when you're looking at particular applications in areas where an LLM is unlikely to be able to get to you and to your end proposition purely because of the multiple either data layers or regulatory constraints or the need to understand the industry incredibly deeply.
And are you seeing people doing that? Are there opportunities?
Yeah, absolutely. So anywhere from investing into sort of embedded AI, into robotics, into industrial systems, where foundational layers for robotics like vSim, the Marchenta that recently got announced, which is actually helping industrial robots learn processes a lot faster from just single repetition. a ton of investments in energy infrastructure for not just the data centers, for manufacturing more broadly. And because, in my world, it's not just about AI. It's, there's other things too.
Easy to forget, isn't it? Yeah, especially on an AI panel, I guess. Vic, finally coming to you. Let's get a bit more macro. Does Europe have a realistic path to producing AI companies that matter globally? I think we've seen Presidents Xi and Trump meeting today. Is all the action not in China and the US?
Yes, I think Europe definitely have a chance to build AI companies that compete globally. I think we have the talent here, we have the universities, and then I think we heard the speech earlier this morning. We have the scale-up fund in both UK and Europe, so that would fill the capital gap for late-stage capital that we have been talking about for years. And we have also seen very successful AI application companies. I think Lovable, like Gora, I'm based in Sweden, so we know them really well, and we have seen that they have tremendous growth. So definitely Europe can build good AI companies. But I also want to be honest about what it takes to build companies that can compete globally. And I have a very strong opinion that I think Europe needs to own the foundation model layer. So we have seen a lot of these companies that they build applications very successfully, but on the US and Chinese models. And I think if Europe ultimately build all our applications on others' tech stack, then you don't become a technology power. You just become like a distribution or compliance market.
Have we not missed the boat on that? Not too late?
I don't think so. I think yeah, we're seeing signs that it's coming up. I think actually I would like to, because I follow the Chinese ecosystem very closely. I think one of the examples that I would like to take is you see there's big internet companies in China like ByteDance, Alibaba. They are building foundation models. DeepSeek is actually not from AI research lab, it's from a quantitative fund. Then people may assume that, okay, China has the foundation model cover, so everyone else should just build on top of it. But that's actually not what happened. You see like companies do food delivery. I think if anyone in China, you know Meituan, and then you know JD, which is like an e-commerce company, and Xiaomi, that's like home appliance. So all of these companies, they are also building foundation models. I think that's because they have this technology ownership mentality. They think the foundation model is just too strategically important. They cannot just leave it out to other people. And I think Europe needs to have that mentality, because otherwise we just build all our application and industry on US and Chinese infrastructure and models. And I think that's really not the place to be.
As much as it would please me to be talking about the future of foundational models in Europe as a European, I think my take is that this is not a game that we can win in anymore. And actually, even going back 3 or 4 years, I don't think we could. Because it's not actually about talent, it's not about ambition, it's about other infrastructure. So energy first and foremost, access to compute is the second one, and then actually deep markets to use those models as well, which helps in the early days. So I think we shouldn't play in the same game and compete head to head in areas where Europe's future and the AI strategy, I think, is quite different, and it's differentiated, and there's a number of incredibly attractive areas that we'll talk about in a second. But I think as far as foundational models are concerned, unless there's a fundamental rethink about what AI intelligence layer is, and even then you will still need to have compute to train it, and we just don't have it.
Or a massive crash.
Yeah, respectfully, I disagree with that. So I think what we have seen is Europe has missed the boat in hyperscaler. And I think what is interesting is all these cloud platforms, they generate enormous cash flow. And then they reinvest those cash flow into data center, foundation model, GPUs. So I guess if you own the platform layer, you can keep funding the next technology wave. And if we don't, then I think a significant part of the leverage economics will sit outside of Europe again. I think, I guess Donald Trump could be like the best thing happen to Europe because I grew up in Europe, but I've seen that like I think a lot of my colleagues or Europeans that I've talked to, people now realize that you have to rely on yourself. You have to rely in Europe. You cannot just rely on the US or Chinese. So you cannot just build your models on others' tech stack or applications on others' tech stack. I think that's my take.
Thank you. And we won't even get into the UK's role in Europe because we don't have time. Okay, moving on. Well, whatever happens in Europe, whether we are to build a global player or not, one of the big issues we always come up against is regulation. Just briefly on this one, the EU AI Act, do we think it's a competitive advantage, a competitive disadvantage, or just irrelevant in a world where technology moves so fast? That's to anyone who would care to answer.
Well, I'll put my 2 cents. I think it's largely irrelevant for the foundational model applications purely because they're non-European. None of them are European, with the exception of Mistral, that will will continue to be a European player operating on the back of the sovereignty drives and so on, but it's not a global scale company. It doesn't look like it can become one from my perspective. So that aside, it's mildly annoying for companies that are building application layer and mildly helpful for companies that are focusing on regulated industries because it gives them an edge over US competitors in European markets. That said, Recursive was public recently saying that Europe has turned itself into an open-air museum and therefore they want to be based in London and outside of the scope of AI Act. So it certainly achieves a degree of annoyance around the founders, but the key thing there is not the fact whether it's stopping the tech developing and whether law is behind technology or above it. I think where the real bottleneck is that the actual buyers of those models will not buy systems that are not compliant with the regulation, and that's what will force a lot of these models to be compliant.
Any other views? Or I think that's pretty comprehensive. Let's move on. I think this is the real nub of what we're here to talk about today. So the capital requirements for funding these companies are enormous and growing by the day, it seems. London already this year, we've had Synthesia, Ineffable Intelligent, Recursive Intelligence, just enormous initial rounds. My question is, and hopefully you all have views given what you do, what role does that leave for, you won't like me for saying this, more traditional early stage VCs, so seed and Series A? When companies are raising 4 billion as a first round, what role can you guys play in it? AJ?
I mean, I think I just don't play a role. Meaning I'm not going to sort of back the model providers, the sort of very capital intensive, because the size of my fund is so small, which leaves me focused on the application and infrastructure layer. And when I say infrastructure, I view model as different. And so I still think, I believe in your view, Max, which is, I think that there's a huge opportunity in the application and the infrastructure layer, and there are really interesting niches and a lot of fragmentation that can drive unique innovation. And so that's where someone like me focuses, but I'll let the bigger checks talk.
Well, I think how that impacted us at Accel is like we ended up working a lot more with AJ, right? So like AJ works a lot with the fund that is one click earlier than where I sit, like the early stage, so they do pre-seed, seeds, and some A's. And now I used to be growth stage where I was investing in, very late stage capital, and now I'm suddenly doing Series A's, right? So I think it's actually required a mindset where the valuation and the dollars needed are my stage, but then the looks of the company is like this stage. And so I think it's created a lot of interesting collaboration and organizational changes within the firm.
And that's changed the way you operate, changed the way you do your job.
For sure.
Yeah. Over what sort of period has that sort of shift happened?
past year.
Moving so quickly. Yeah, do you, it's a trend that's here to stay, you think?
I think so. I think, well, let's see, like if the compute layer starts to actually, the price of an H100 starts to come down again, then maybe, the rounds will be more like 10, 20 million to start instead of now 50 to 100 or even hundreds of millions. But the funny thing about compute, and actually to your first point on prices of the infra layer coming down, we've actually seen it start to come up again. Like an H100, when we were doing the Nebius deal 2 years ago, the price was maybe like $2 per hour for compute. Then it went down to like 1.6, and now it's back up to above 2.
Vic, any views?
Yeah, so from corporate VC perspective, obviously we cannot, our ticket size is usually a lot smaller, but we do see some opportunities right now to invest in this like first round of like 500 or a billion, 100 million or a billion round. I think what we can bring from corporate VC is that we have the use case, we have the data, and we have like the real world problems that this AI labs is looking for. So increasingly, I think usually we don't usually get allocations, to be honest. But then I think increasingly we can see that like this frontier lab that they see. They see the value from corporates, and that's what we can bring. I think in addition, a lot of the corporate we see, we have like a community or network ourselves, so we can make introduction to other corporate or other enterprise that has a real problem that or data that this frontier AI lab is looking for. So yeah, we are looking into a few AI labs that is not. Usually we don't participate in such a big round and very high valuation, but we are evaluating a few of them right now.
For us, we don't invest in foundational models. We have done 3-4 years ago when we felt that where we could find very, very clear vertical niches for why this, even back then, why they would withstand a few years of competition, and those bets are actually doing well. How I wouldn't have the guts to do it now, I have to say, but we'll see how that pans out. We just go beyond the LLM. We go beyond the foundational model. We think about, again, what about embedded AI? What about the physical layer? What about this massive opportunities in life sciences, for example? It's an incredibly exciting area of application from our perspective that we've been investing quite actively in, where the world of life sciences is completely different to the world of internet.
Is there better value there because everyone's so obsessed with AI?
Yes, because ironically, even the technology-driven companies in life science world operate on the life science-based principles and valuations. And to be honest, sometimes it's almost shocking to see how big that gap is. But I think it's not so much about the price of coming in. It's whether these companies can actually convert the opportunity in front of them. Because we have a company in the portfolio that is actually treating patients for cancer now, which is real. And actually, the results are absolutely staggering what they're achieving. They could actually eradicate cancer, plausibly. If not them, somebody else. And that's what really is so exciting. Manufacturing, 85% of, I'm closing the point here, but 85% of all manufacturing are moms and pop shops making anything from hamburgers to little switches for electronics and so on and so forth. What about automating that? How much value? It's trillions of dollars of value. So why wouldn't we focus our effort and resources onto solving those types of problems?
I think that's a fair point. And as an ex-journalist, I think the media has some part to play in its obsession with AI at the expense of everything else going on in the world. So I'll take some blame there. Right. Last question, and then we might have time for a couple from the floor. So we're going to fast forward to 2030. What does the AI landscape look like? And just to narrow it down, what's the sort of one bet you're making that maybe the world doesn't recognize now, but will in how many years' time that is for. AJ, start with you.
Yeah, I mean, when I think about the bet for 2030, it's kind of, I would say it's the AI application layer again. Like, I still believe fundamentally that there's going to be an incredible opportunity in that very, very wide swath. And I think where I would probably go, double click into that is like very, interesting sort of like improvements to the application layer when it comes to like supply chain, like really complicated, deep enterprise workflows. That's what I kind of get excited about, is like when there's that unique moat that goes back to what you were saying, which is like deeply integrated into the systems.
My prediction for 2030 is that there's no way we can predict it. Like, I made these predictions about a year and a half ago saying, oh, open models are going to be a thing, like everyone's going to shift there. It's seriously not the case. Like, OpenAI and Anthropic are still pushing the frontier. But I think the one prediction I can make is on compute. Recently met some companies, doing compute underwater, compute in space, and so forth. And I think we'll see a lot more data centers in all parts of the world and beyond.
Max?
My hunch is that within the AI world, the foundational models will eat more into the layer below them, and they will own up not just the coding, but certain other lucrative applications like legal, like creative, like customer sales and CRM stuff. So it will be a much tougher world for the horizontal AI companies of today, but it's above my pay grade to really guess that carefully. All I can see is that within the main themes that we are backing, and I've mentioned health tech, I've mentioned AI infrastructure layer, solving for energy, solving for those fundamental problems. I can see such a massive impact of these technologies that are unlocking solutions, maybe AI-driven, but they unlock real-world solutions to problems that were not possible before. And they remove those bottlenecks, and the value being created is staggering, and there's pretty strong moats around that, and that's what we're focusing on.
Yes, I think I agree with Kelly that it's really hard to predict, like in 4 years' time, on how AI is developing. But I think I continue with my point that I'm quite bullish on Europe. So I think we start to see signs that there were new AI frontier labs that is coming out. For example, I think everyone talking about the Accel ineffable intelligence, and Jan LeCun has set up Army Labs in Paris. I guess one example is DeepMind, founded in London. They have created a generation of AI researchers. And I think those talents are now turning into companies, and they're turning into AI frontier labs. So I guess my bet is that in 2030, Europe should be at the same level as US and China, compete at the frontier layer.
Let's leave it on that optimistic tone. Thank you very much for a great panel. We do have time for 2 questions, I'm told. Anyone?
We've got one right at the front.
Thank you very much for the insightful panel. My name is Mario Aquino. I run Operating VC, Future Labs, ex-McKinsey Ventures. So we focus a lot on enterprises, and one of the areas of excitement, like on AI, is really about enterprise adoption. I wanted to get your perspective on what are some of the challenges you have seen, like in that, and also in the wake of some of the big announcements, with the OpenAI, DeployCo, Anthropic, like Blackstone. Are they going to be, like so far ahead, like in execution versus the others? Thank you very much.
On the enterprise, I think people, top of mind for them is observability, so tracking how people are using AI, and security. So I think actually this year is going to be a big year of how do we make sure we can see what employees are using, like even shadow AI, like AI startups that they are allowed to use versus not, and like looking into that. So I think that side of things will be big.
Yeah, my view is that so much of what makes enterprise technology work is the deep integrations into the existing systems, and I think that that's where a lot of these sort of application layer companies like can develop a better sort of strategy and moat, because just having an MCP connection into your SAP system or your NetSuite does not work, right? It needs to be kind of infrastructure grade, like that you are betting your business on getting that AI connection. And so that's why I think very focused application layer companies that are doing that into the enterprise stack can be differentiated.
Thank you.
Just got one in the middle, and then I'll come back round.
Hi, everyone. I'm Charlotte. I'm Chief of Staff at New Work Software. And this particular shift in AI, enterprise AI, is it really about applications? Because it seems to be more like a unified layer of execution, and it's not happening in 2030. It's happening right here, right now. The market is shifting. And while you kind of talk a lot about horses, we're actually now entering a market that is turning towards the automotive already, and no one's talking about that. And Mr. Bautin, I find that quite a bold assumption to say that Europe has no chance in winning this market because we're entering a completely new game here. And the playbook is being written as we speak. And just because OpenAI and Anthropic are bigger and louder and maybe backed with more capital, that doesn't mean that they're better, because they're also navigating the unknown here. So I think Europe actually has a chance to win this market if we step up now and not just wait and let another US company take over the next foundational technology layer. Because that's what I see happening here once again. And also with SAP now pulling up their walls. That just happened this week. They're pulling up their walls. They're restricting the access for enterprises for their own data because they want to secure their own position in a new market. Why don't we talk about that?
I'm not sure what the question was, but I just go back to the one point that you picked me up on. What I have said is that I don't think that Europe's game is to try to reinvent the foundational model from my perspective. I think the odds are very much stacked against it, not because we can't do that. We have seen enough talent, and a lot, of course, of talent in some of these US labs is European in the first place. It's not about talent, it's not about regulation, it's about structural issues. Access to energy, first and foremost. You can't be building, the reason why OpenAI pulled out of the UK data center projects is because UK is the most expensive energy on the planet right now per kilowatt of electricity. How do we change that? How do we enable that the next generation can actually be built in Europe? And in the meantime, we focus on other things which can create a lot of value for us. That's what, from my perspective, is important, and that's what we're trying to invest in.
Hi, I'm Raj Kulasingam. I'm sometimes a lawyer, sometimes an investor. So I'm asking this with both hats. So every day you see some of these AI models like Claude, et cetera, saying, we've got a product that's going to make lawyers extinct. First of all, you've got companies like Legora and Harvey, et cetera, who are specifically focusing on the legal market. How do you see this whole place playing out, number one? And are lawyers going to be extinct, number two? And if not, how are they not going to be extinct? I'm really interested in the last piece.
Yeah, I don't think Legora and Harvey are going to be extinct. And I think it's because if you really think about the momentum, the continued product innovation, and like the deep sort of, what I would again go back to is like deep workflows. Like if we take a step back, Anthropic built an app that's called Claude Code. They now have a ton of effort and work that needs to go around that. And I continue to struggle with this idea that the model providers are going to be able to build the UI, the deep product innovation, the constant iterating of the UI. That UI matters, right? I was at Slack for 8 years. Everyone, when Slack got funded, they were like, Slack, how can Slack be a successful company? It's a chatbot, right? I think it was the continued innovation, what Kelly said about momentum. Again, I'm broken record, but I still believe that these application layer companies can endure the model providers.
Well, I sure hope Lagora doesn't go extinct because we just invested in the last round. But our view is like it's the age-old question of horizontal versus vertical. And we've noticed that certain industries love vertical, like people who build just for them. And there are little features here and that differentiate it. And finance and legal are two sectors that, I was a banker for 10 years ago. But we had our specific tools. We didn't use tools that other industries use, right? So I don't know why, but like there are specific professions that love having their own dedicated tools. And so that's why we betted on that.
And at the risk of just 1 second, maybe your question was, at least I heard it as being more about the profession dying out rather than particular application. And from my perspective, it seems that at the moment, whether, in coding, for example, which is the most advanced implications, you see the experienced coders becoming 100x amplified. And that will probably happen in some of those other white-collar professions. The question for us as society is what actually happens to the next layer, and how do we ever generate experienced programmers or lawyers if no one actually gets hired at the junior level? How do we make that experience journey for those that are AI native but don't have home experience? Yeah.
Thank you guys for this opportunity, of course. I learned a lot. Being an 18-year-old that's trying to secure a future, maybe 5, 10, 15 years from now, and growing up in a very fast-paced environment, what would you guys give me as advice to focus on, research, and look into to secure my future?
Mine is it's do what you love. That's the most secure thing. Like technology, every wave changes. If you did climate just because you thought that it was a great career 3-4 years ago, look at us now. So many people do not care about climate. So I just go for what you love.
The biggest thing for me is just sort of creative problem solving. Like when you think about the thing you love, how do you now think about creatively problem solving in that space with the new tools, all these new tools being these AI tools. So I would urge you to just find the passion you have, and then try to build something with any of these platforms, and make sure that you are just fluent with AI, right? Like I constantly try to tinker with OpenAI, Anthropic, all of the different model providers, whether it's the voice or the chat ones.
I agree with all that, but I guess sometimes it's hard to find your passion when you are 18. I certainly didn't expect that I would be working in VC when I was 18, but I think right now there were so many exciting companies happening. Try to get a job in those companies. I think it would be really good, so you are in this wave.
Perfect. Thank you, guys.
I'm so sorry for the guys that got their hands up. Unfortunately, we're just a little bit pushed for time, so we're going to have to move on. But can we please give everyone on the stage, Peter, Max, AJ, Kelly, and Vic, a massive round of applause.